Welcome to NACHA 2026, the account validation rule that changes everything. This video offers a strategy deck focusing on fintech infrastructure, compliance, and market intelligence for Q1 2026. Please note this is for professional and institutional use only and is not investment advice. Our table of contents covers 7 key areas, including an India macro snapshot, global macro headwinds, market structure, Bank Nifty technical view, trading strategy, NACHA compliance deep dive, and risk factors and sources. We begin with Section 01, India macro snapshot, analyzing key elements like RBI policy, inflation, GDP, fiscal position, and INR dynamics. The current RBI repo rate is 6.25%, following a cut in February 2025. The policy corridor is defined by the SDF rate at 6.00% and the MSF rate at 6.50%. The INR/USD is under range-bound pressure around 84.2, with the CRR unchanged at 4.00%. CPI inflation has decelerated sharply to 3.61% within the RBI's comfort band, suggesting room for further rate cuts in FY26. Resilient GDP growth around 6.4% to 6.5% favors rate-sensitive sectors and supports Bank Nifty's medium-term direction. Next is Section 02, Global Macro Headwinds, which examines the Fed rate path, DXY, US yield curve, FII-DII flows, and EM risk premia. The Fed pause at 4.25% to 4.50% keeps the USD elevated, compressing emerging market equity multiples. FII outflows peaked in January 2025. Domestic institutional investor buying provides a structural buffer, with a potential Fed pivot in H2 2026, possibly triggering FII re-entry. Moving to Section 03, Market Structure. Here, we analyze index levels, breadth analysis, sectoral heat map, and advance/decline data. As of March 28, 2026, Nifty 50 and Bank Nifty showed month-to-date declines. Conversely, Nifty IT and Pharma saw positive returns. Sectoral performance shows mixed results, with IT and Pharma gaining, while bank and PSU bank sectors declined the most. Section 04 presents the Bank Nifty technical view, detailing support and resistance levels, RSI, MACD, PCR, max pain, and open interest analysis. Bank Nifty's key price levels include strong resistance at 54,500 and strong support at 50,500. Technical indicators show an oversold RSI at 42.3 and a bearish MACD signal. The PCR is slightly bearish at 0.92, with the max pain point at 52,000. In Section 05, we outline our trading strategy, including a scenario matrix, option structure, payoff chart, and risk management rules. We outline 3 scenarios for Bank Nifty: bullish, 30% probability, range-bound, 45% probability, and bearish, 25% probability. The corresponding option strategies are a bull call spread, an iron condor, and a bear put spread, detailing net debit, credit, max profit, and max loss. Our risk management rules cover position sizing, stopping loss at 1.5 times the net credit, and expiry management. We also include an IV spike protocol to reduce Vega exposure if VIX India exceeds 20, and a monthly drawdown rule of 6%. Finally, we deep dive into Section 06, NACHA 2026 compliance, focusing on the account validation mandate, roadmap, vendor matrix, and technical integration. Fintech platforms face non-compliance fines and failed ACH transactions due to NACHA's 2026 account validation mandate. Our step-by-step roadmap turns this into a competitive moat through a 4-phase compliance process, culminating in go-live on March 21, 2026. Our vendor selection matrix uses 4 criteria, including coverage, latency, audit trail, and fallback logic, setting minimum thresholds to avoid red flags. Proper implementation creates a hidden compliance edge, leading to lower ODFI requirements and reduced transaction pricing. Moving to Section 07, we review risk factors, data sources, and a necessary disclaimer. Key risks include counterparty, regulatory, market, and source provenance. Key risk factors include medium regulatory risk and high market risk due to potential Fed surprises. Data sources are tiered, with Tier 1 sources like RBI and MOSPI providing essential macro and liquidity data. Tier 2 sources include Fred, the U.S. Treasury, BLS, and NACHA. Remember that this video is for informational purposes only and is not investment advice. The company that has quietly built the most comprehensive instant account verification infrastructure, positioned as compliance as a service, is Plaid.